Hey guys, have you heard of a DSCR loan? You may be wondering, what the heck is that? Stay with us and we'll tell you all about it right after this. Hey guys, Aaron with Marsh Lending on 38 in Florida. We're here talking about a DSCR loan. What the heck is it and how can it benefit you as you look for investment properties? So let's take a look at it right now. What is a DSCR loan? Pretty simply, it's called a debt service coverage ratio. DSCR. So it's a debt service coverage ratio. What does that mean? Well, do you remember when you were kids and you'd play on a seesaw on a playground? Think of it in the same way. So I'm buying an investment property. Why is it an investment property? Because I'm going to get rental income, either from a long-term renter or for a short-term renter. And so what does that look like? Well, let's kind of make it up. So here's my rental income. Here's the seesaw. On this side of the seesaw is my P&I for my mortgage payment, which is principal and interest. And then here's my homeowner's insurance and my property taxes and an HOA fee if I have any. So when it's equal, that means the seesaw is parallel, where my rental dollars and all of this are equal. That's called a 1.0 ratio, right? And that checks the loan. So we can go ahead and move forward into underwriting and get approvals and keep going down that process of getting you the home without looking at your personal finances, your tax returns, bank statements, all of that kind of stuff, because this has been covered. Now, what do you say if, let's say it's a newer property or a newer area, rentals aren't quite as high yet, but I know once you get in there, you're going to raise rentals, right? So you're going to make it happen. Then if rentals are a little less than this, we can still do the loan and we can still cover it. But that's at like something like a 0.75 ratio. So there are programs and products, and you'll work with your loan officer on those, that can help still do a debt service coverage ratio or a DSCR loan, but the rentals aren't quite high enough to get there. Now, there's also a third piece of it where we can do a hybrid. So we can take your income to help qualify the loan plus rental income, and then that'll check the loan, right? So when we add what you're going to get from rental income on this investment property, plus the income that you already have, then that'll also help get us there in terms of being a booster to your income to make sure you get the property, and then you start down that path of being an investment property owner or an investor. And then you can start building businesses in terms of getting that secondary income from the property. So, there's a lot to cover here, but this is a huge product in the investor community. It's something that we do a lot of. A lot of loan officers handle it, and then it's really something you need to check out if you're going to do this kind of investment property purchases. Okay, so that was a lot to cover. Let's tie it up in a bow. Let's recap really what we're talking about here. What you're trying to do is make the rental income be equal to or higher than your payment on the loan, your homeowner's insurance, your property taxes, and your HOA. If you can make that happen, then you are well on your way to qualifying for that investment property. If you have more questions on this, again, I know it's a big topic, leave it in the comments below or contact us directly. Our contact information is in the descriptions. Hope you enjoyed this video. Taught you a little bit about DSCRs, and talk to you soon.